Holders are on edge as they wait for a crucial verdict in the ongoing litigation between the SEC and Ripple. This is because the excitement surrounding the possibility of an XRP exchange-traded fund edge ETF is growing. An investigation into charges made by the Securities and Exchange Commission against Ripple, alleging that the company offered unregistered securities in the form of XRP, has been going on since 2020. Initially, the court's verdict was anticipated to be made in May of 2024. However, as of the 27th of May, it has not yet been revealed. Because this decision is about to be made, there will be a prolonged period of uncertainty, which will affect the XRP community significantly. Furthermore, huge financial ramifications are also at stake simultaneously, such as the SEC demand for a penalty of $2 billion, which was met by a response from Ripple for $10 million. Is the XRP exchange-traded fund at about to be launched? Analysts determine the most important catalyst to market movements and insights from polls. The performance of XRP on the market has been turbulent, despite the increased optimism that has been observed. On Monday, the value of XRP dropped by almost 2% on Binance, which brought to light the uncertainty that exists in the market as a whole. Additionally, the poll conducted by the XRP Ledger Validator, in which 876 individuals took part, revealed a divided opinion. 66 respondents expressed confidence regarding an exchange-traded fund by the year 2025, while 34 expressed skepticism. As a result, this split draws attention to the conflicting sentiments that exist within the XRP community on the future of the cryptocurrency market and regulatory framework. Bullish trends and targets analysis from a technical perspective within the context of regulatory uncertainty. The technical indications of XRP suggest the possibility of an upward trend. Since the 18th of April, XRP has been considerably experiencing higher highs and higher lows, which indicates that bullish momentum is developing. On Monday, XRP was able to maintain its price at 5,300 cents, which represents a rise of over 1%. Additionally, the moving average convergence divergence MAC indicator emphasizes positive momentum, and the relative strength index at 52 implies bullishness. Both of these indicators help to highlight strong momentum. Analysts are currently anticipating a target price of 0.57, which represents a potential increase of 7 from the current levels. Nevertheless, it is possible that support at the low point of May, which is 0.48, will be necessary to maintain this upward trajectory and get ready for further recovery. Investors have taken notice of a recent statement made by a lawyer who supports XRP. The statement was made about the ongoing case that Ripple is facing against the United States Securities and Exchange Commission SEC and Ripple burning escrow. In a recent article on X, attorney Bill Morgan minimized the influence that Ripple's current dispute with the United States Securities and Exchange Commission in the burning of Ripple's escrow had on the price of XRP. Therefore, let's have a look at the conversations and find out how the XRP lawyer perceived the impact that these events will have on the performance of the XRP. Bill Morgan's analysis on Ripple's escrow burn and lawsuit. Pro-XRP attorney Bill Morgan recently addressed the perceived influence that Ripple's activities have had on the performance of the XRP market. Morgan observed that Ripple's decision to not burn XRP escrow has not demonstrated any substantial impact on the price symmetry of the cryptocurrency. This is in contrast to Stellar, which burnt its XLM tokens rather than burning them. In addition, he underlined that the pricing trends of XRP and XLM have stayed virtually the same, even though Stellar is not being sued in the same way that Ripple is. Morgan hypothesized that these particular market behaviors are most likely the result of external variables that are unrelated to either the internal operations of blockchain or blockchain itself. Particularly noteworthy is the fact that his response suggests that Ripple's escrow decisions and legal difficulties have not significantly impacted the dynamics of the XRP market. According to the context, Morgan's comments were a response to an observation made by a user regarding the price parity that has existed between XRP and Stellar since 2014. During the subsequent bull run, the user posed the topic of whether or not the two cryptocurrencies would break out together. They also questioned what might be generating this pattern. In a recent analysis, James Medelaman Murphy, the founder and chairman of the legal firm Murphy and McGonigal, examined the potential impact that President Joe Biden's administration policy revisions could have on the dispute between Ripple and the Securities and Exchange Commission. Amid the ongoing political shifts in the United States, Murphy provided his observations on X, bringing attention to the potential consequences that these regulatory changes might have. Because Gary Gensler, the Secretary of the Securities and Exchange Commission, is so adamant on regulating cryptocurrencies, the larger political sphere, and the next elections may bring about significant changes. Before the results of the election are known, I would not settle any cryptocurrency dispute with the existing sector. I would anticipate a very different Securities and Exchange Commission under the direction of someone with an open mind, such as Hester Peirce or someone to that effect. When contemplating the current trend of the SC, Murphy also cautioned against settling with the agency about the possibility of a change in leadership within the Securities and Exchange Commission. So he indicated that Ripple could perhaps benefit by waiting to see the results of the election. I would not settle any crypto case with the current CES before seeing how the election turns out. He recommended on X about the cryptocurrency. In addition, Murphy brought attention to the possibility of a leadership that is more open-minded, such the one that Hester Peirce followed. He also mentioned that a new regime may dismiss many crypto cases that were launched under the tight regulations of Gensler, particularly those cases that lacked evidence of fraud or victims. In contrast to the pro-crypto stance taken by former President Donald Trump, the administration of President Joe Biden has approved a spot Ethereum exchange-traded fund, which suggests that the administration is taking a more inclusive attitude to cryptocurrency. A strategic response amid the political war was highlighted by the fact that Biden's policies were inspired by Trump's declaration to protect crypto interests and advocate for self-custody among American crypto holders. As a result, this transition toward a system that is more crypto-friendly under Biden could have a considerable impact on the regulatory framework. Yet it does not have any direct influence on the decisions that are made by the judiciary. Repercussions for Ripple's approach to the legal system, Murphy observed that the independence of the judiciary means that the decision that Judge Torres will make in the CCVS, Ripple action will not be much impacted by Biden's relaxation of his attitude on cryptocurrency. Nevertheless, it has the potential to affect the way that the SEC takes in the conversations over the possibility of a settlement. In addition to this, he said that Biden's softer stance on cryptocurrency might also transform the SEC's position in the negotiation process. Because some users call for settlement to minimize the uncertainties of future administrations, these conversations on X thus clearly reflect the strategic issue that Ripple is currently facing. In addition, even though Murphy accepted these points of view, he abstained from offering any advice regarding Ripple's particular course of action. Cryptocurrency aficionados are looking forward to favorable changes in the cryptocurrency industry as the future presidential elections in the United States of America are planned to take place in November 2024. The information that has been provided is not intended to be trading advice. There is no responsibility for any investments that are made based on the information that is provided on this page. Before making any decision about investments, we strongly advise conducting independent research and consulting with a knowledgeable professional.